What is 1244 stock? 1244 stock is a classification on investments used when filing a capital loss on personal taxes with the Internal Revenue Service. Usually there is a $3,000 US limit on losses that can be counted against personal income. With a 1244 stock, individuals can write off up to $50 US as ordinary loss. For example, an individual shareholder Bob invests $100 US in stock of Corporation A. Corporation A has a difficult year and its shares drop dramatically, so Bob sells his shares off for $40 US, creating a loss of $60 US. His additional investments are doing well, so he has $10 US in capital gains from other investment sources. Usually he would be able to claim $10 US capital losses against his capital gains and an additional $3 US of ordinary loss against his other regular W-2 income. If the stock in Corporation A qualifies for 1244 status, he can now claim not only the $10 US capital loss against his capital gains, but the additional $50 US in ordinary losses against his regular W-2 income. There are a few strict requirements that must be met for a stock to qualify as a Section 1244 stock. The business must be a small corporation, meaning that the gross receipts including stock sales must not be greater than $1,000 US. It also must have become a corporation after November 6, 1978. For the past 5 years, the corporation must have received more than 50% of its income from sources outside of its exchange-related activities like royalties, dividends, interest, annuities, and sales of securities. A 1244 stock loss can only be claimed by an individual or partnership, not another corporation or estate. It must have been purchased on the original public offering. The stock itself must be either a common or preferred stock that was purchased with cash or for property, not in exchange of other stock or for services. The stock is reported on IRS Section 1244 Form 4797 Part 2. The stockholder who claims the loss must keep records that set the Section 1244 stock apart from their other stocks. The IRS requires them to keep detailed documentation. Records should include information that show that the corporation qualifies as a small business corporation and that they were the original holders of the stock, the amount the stock was purchased for, and proof that it was a cash or property exchange, any information about property transfers for the stock or dividends issued on it, as well as company receipts data for the past 5 years. In the case of an audit, these documents are required to prove the shareholder's claim that the investment was a 1244 stock.